Imagine a world where everyone decides at the same moment that being average is no longer acceptable. Everyone wants to be rich, not comfortable, not stable, rich. Here's the uncomfortable truth. If everyone tries to be rich at the same time, most people end up poorer. That's not a moral claim. It's math. And right now, this matters more than ever. Because for the first time in modern history, billions of people are playing the same financial game, chasing the same assets, following the same playbook in real time. Stocks, crypto, real estate, side hustles, leverage, passive income. The idea is simple. Work hard, invest smart, escape the middle. But the system those promises rely on was never designed for everyone to win. Let's slow this down. Being rich doesn't mean having money. It means owning scarce things that other people want. Land, shares, businesses, assets that produce income without your labor. Now here's the part nobody likes to say out loud. Those assets only work because most people don't own them. Think about housing. If everyone could afford a second home, housing wouldn't be an investment. If everyone owned stocks, stock returns would collapse. If everyone earned passive income, it wouldn't be passive, it would be competed away. Wealth depends on imbalance, and imbalance depends on limits. Historically, this was hidden. Only elites had access. Capital markets were slow. Information moved at human speed. Today, none of that is true. Now, the moment a strategy works, millions copy it. Returns shrink, risk rises, leverage fills the gap. This is where things get fragile. Let's talk about the uncomfortable math. We often hear that the market averages 7 to 10% a year. That sounds fair, predictable, almost democratic. But that average assumes something very specific, that not everyone is investing the same way, at the same time, with the same expectations. When everyone expects high returns, prices rise faster than real value. Future gains get pulled into the present, and what looks like growth is often just tomorrow's money being spent today. This is how bubbles form without anyone feeling reckless. Everyone is being reasonable. Individually, collectively, it's a problem. There's a quiet irony here. The more people chase wealth through markets, the more markets start behaving like lotteries with spreadsheets. Returns become less about productivity and more about timing. Who got in earlier? Who could borrow cheaper? Who could survive longer? This is where debt enters the story. When organic returns fall, systems compensate with leverage. Margin, mortgages, corporate debt, government deficits. Debt doesn't create wealth, it accelerates it, forward in time. But acceleration cuts both ways. When asset prices stall, the debt remains. And suddenly, wealth isn't being created, it's being transferred. From late entrants to early ones, from workers to asset holders, from the future to the present. This is the part rarely shown in hype videos. Public narrative says anyone can win. Private reality says everyone cannot. Even if everyone is smart, even if everyone works hard, even if everyone invests responsibly, the system itself needs losers to define winners. Zoom out, and the risk becomes bigger than personal finance. When societies are built on the promise that everyone can escape, but structurally most can't, frustration doesn't stay financial. It becomes political, social, unstable. You see it in asset inflation alongside wage stagnation, in rising inequality during record market highs, in young generations taking more risk earlier because safety no longer works. This isn't because people are greedy. It's because the middle stopped feeling secure. And here's the final tension. If people stop trying to be rich, the system slows. If everyone keeps trying, the system destabilizes. There's no clean resolution, Just a question that lingers beneath every investment app and financial headline. In a world where wealth depends on scarcity, what happens when scarcity is the one thing everyone is chasing? And if being rich only works when most people aren't, what does success even mean in an economy like that?